Hey, globally, worries are looming and they're really starting to grow. Of course, we know that's the UK Brexit is coming up, the U.S. economy growing so slowly, and now billionaire investor George Soros, he's back. He says he's seeing this as an opportunity to get back into the trading game, but not on the side that's going to make your 401k happy. To Jared Levy of ProfitableTrading.com, the senior strategist there. You know, in the last few days, it feels like the coolest thing to do for billionaires is to talk negatively about the market.
It's like, I'm glad Soros actually joined the game. You know, if you remember a couple months ago, Ackman, Bass, Tepper, you know, other three very prominent hedge fund managers, they started talking about shorting the Chinese yuan, right, and the problems in China. And now Soros is stepping in. And, Charles, you and I both know that when they're vocalizing these opinions, they're probably talking up an existing book, an existing position.
Right.
So I would think that he's already probably pretty well established. And you know what? It's viable. There is a risk. The question is, when does it manifest itself?
You know, there are two things here. So you're right. We've got two things here. On one hand, we've got, I call them the masters of the universe, right? I mean, the pharaohs of Wall Street. But they've had a pretty rocky last couple of years, and I think they've got to go for some of these home run plays. And a big bet right now, if you're going to make it, may be for a 20% correction. It hasn't happened in a while.
It hasn't, and you bring up another great point, is these guys don't play for pittance, right? They don't come out and try to hit a 5%er or a 10%er. These are the guys that look for the complete meltdown, and I believe in my heart of hearts and watching the markets and watching these guys that they probably have been getting hurt here over the past couple of months. Listen, you know, I've been bearish overall for the past couple of months, and I had some winners, but that meltdown hasn't occurred. I do think it's coming, Charles. I do think stocks are very, very rich here. I think the Fed is in a sort of no-win situation next week. I think that triggers something. But based upon Soros' sort of delivery here, he's looking for something big, and he's buying gold. That's the one thing we know, gold and gold miners. And, again, gold in a higher interest rate environment is only going to thrive if the world is falling apart and people are flocking to safety. So there's a point there as well. And maybe you look to gold here. Well,
yeah, gold is acting pretty good. I know it had its biggest move in 3 months yesterday, but it had been pulling back. But here's the thing. You said meltdown. Right now, though, we're getting a melt up. And what do you make, Jared? Before that jobs number, Wall Street has sort of come to grips with the idea that the Fed was going to hike rates. So the market was rallying along with the notion of a June, possibly July rate hike. That's the one thing that's supposed to derail the rally. If Wall Street could accept a measly 25 basis point rate hike, isn't there a chance it could break out?
It can and it can't, right? So, first of all, the Fed has to explain away why they don't hike. And whatever word she uses to describe the reason behind that is probably going to be bearish, right? So that, in my mind, is where that negativity comes in. And, yeah, Charles, I mean, in my mind, the market has already sort of priced in that extra 25 basis point hike. And I think, again, I think that we need to have the realization of, you know, what's really going on right there. What is the Fed really worried about, and where is the real risk lie? And in my opinion, let's just get back to brass tacks. There is no earnings growth. We're in an earnings recession. So until we sort of reverse that mindset, I don't know how you could be bullish here. I guess that's my argument, you know, Fed or not Fed.
All right, Jared. Thanks a lot, buddy. Really appreciate it.
Thanks, Charles.